Welcome to our comprehensive guide on Montana tax residency. If you're considering relocating to Montana for its favorable tax conditions, you're in the right place. Montana is known for its lack of a sales tax and relatively moderate income tax rates, making it a desirable option for many looking to optimize their tax situation. However, establishing residency for tax purposes isn't just about moving. It requires a thorough understanding of state laws and conditions. In this video, we'll take you through the necessary steps to become a Montana tax resident and the benefits you'll enjoy by making this state your permanent home. To start, let's clarify what tax residency actually means. Your tax residency determines the states that can tax your income, and as a tax resident of Montana, you would be liable for income tax on your global income while potentially bypassing the higher taxes imposed by other states. It's crucial to note that tax residency differs from domicile. Domicile refers to your legal permanent home. While you can only have one domicile, you may be considered a tax resident in various states if you don't keep track of your time spent in each. This distinction is important as you begin to lay the groundwork for establishing your Montana residency. One of the key criteria for becoming a tax resident in Montana is the physical presence test. Specifically, you need to spend more than 183 days in Montana during the tax year. This doesn't just mean being in the state for over half of the year, but it also involves showing that your life is centered there. To effectively monitor your time spent in Montana, consider using a residency tracking app like Pebbles. Tracking your days is essential for establishing your residency and ensuring compliance with state tax law. So make the 183-day guideline your benchmark, but also explore other factors that may influence your residency status. Once you've made the move to Montana, there are essential steps you need to follow to formalize your tax residency. Begin by relocating physically to Montana, while also taking legal actions such as changing your address for bank accounts, updating your driver's license, and registering to vote. These steps not only demonstrate your intent to reside in Montana permanently, but also create a concrete paper trail that substantiates your claim of residency. Additionally, establishing financial connections like opening local bank accounts or transferring your investments to Montana can further solidify your residency status. As we conclude this guide, it's equally important to understand the benefits and obligations that come with being a Montana tax resident. While the progressive income tax rates in Montana range from 1% to 6.75%, they are still lower compared to states like California or New York. Plus, with no sales tax, you can make significant savings on purchases, further enhancing your economic situation. But remember, maintaining your residency not only requires tracking your time spent in Montana, but also understanding how to navigate potential audits from your previous state. As you embark on your journey to becoming a Montana tax resident, keeping thorough documentation and making informed financial decisions will be your keys to success.